The global currency markets are witnessing a seismic shift today as the Iraqi Dinar and Vietnamese Dong surge to all-time highs, igniting intense debate and speculation among traders, economists, and investors worldwide. The sudden upward momentum in both currencies has sent shockwaves through Forex markets, with many calling this a possible turning point in the financial landscape of two emerging economies that have long been under close observation. What we are seeing right now is not simply a minor fluctuation or a short-lived market rally. This is a rapid, decisive movement that is drawing unprecedented attention from financial analysts, central banks, and institutional investors, all eager to determine whether this is a fleeting moment or the beginning of something historic. In Iraq, the dinar's surge is being attributed to a combination of stronger-than-expected oil revenues, a noticeable stabilization in political governance, and a tightening of monetary policy by the Central Bank of Iraq. The country's recent fiscal reports show a significant improvement in foreign reserves, giving the central bank greater leverage to manage its currency and instill confidence in the markets. Over the past months, we have also seen a steady influx of foreign investment, particularly in infrastructure, energy, and trade logistics, which has further strengthened the currency's fundamentals. Today's jump marks one of the most aggressive upward moves in the dinar's modern history, raising questions about whether Iraq is finally on a sustained path toward economic resilience and global market integration. The Vietnamese Dong, meanwhile, is experiencing its own breakout moment. Analysts point to Vietnam's robust export numbers, strategic trade partnerships, and increasing role in global manufacturing as key drivers behind this sudden rise. The country's economic data over recent quarters has outperformed expectations, with growth driven by sectors ranging from technology to agriculture. Vietnam has become a critical link in the global supply chain, benefiting from geopolitical shifts that have pushed multinational corporations to diversify manufacturing bases away from more volatile regions. The State Bank of Vietnam has also played a pivotal role in maintaining currency stability, and its recent monetary adjustments appear to have strengthened the dong's position in the global market. For investors who have tracked these currencies for years, today's developments feel like the culmination of a long, turbulent journey. Both the dinar and dong have historically been seen as undervalued, constrained by political instability, global market skepticism, and structural economic challenges. Yet the narrative now seems to be changing. The combination of macroeconomic reforms, targeted fiscal policies, and strategic foreign investment is creating an environment in which these currencies are no longer viewed as high-risk plays for only the most speculative traders. Instead, they are increasingly being discussed as legitimate contenders for long-term portfolio diversification in emerging markets. Market reactions have been swift. Trading platforms across Asia, the Middle East, and Europe are reporting unusually high volumes for both currencies, with buy orders outpacing sells by a wide margin. In some cases, demand has been so intense that brokers have temporarily widened spreads to manage liquidity. Gold and oil markets have also shown movement as investors recalibrate positions in response to shifting currency values. Major investment houses are rushing to update forecasts, and some have already revised their long-term outlooks for Iraq and Vietnam, citing stronger fundamentals than previously projected. However, seasoned analysts are quick to temper the excitement with a reminder that currency markets can be volatile and unpredictable. While today's record highs are undeniably significant, sustaining these levels will require consistent economic performance and careful policy management. For Iraq, that means maintaining political stability, ensuring transparent fiscal practices, and continuing to diversify its economy beyond oil. For Vietnam, the challenge will be to preserve export competitiveness, manage inflationary pressures, and navigate an increasingly complex global trade environment. Without these factors in place, today's rally could still be vulnerable to a reversal. There is also the question of external forces. Global interest rate trends, geopolitical tensions, and fluctuations in commodity prices could all influence the trajectory of these currencies in the months ahead. The US dollar's performance will remain a key benchmark, as both the dinar and dong are sensitive to changes in American monetary policy. Any unexpected moves by the Federal Reserve could quickly alter market sentiment, underscoring the need for cautious optimism rather than unbridled euphoria. For those on the ground in Iraq and Vietnam, the effects of these currency movements are being felt in real time. In Baghdad, business owners are expressing cautious relief as the stronger dinar boosts purchasing power for imports, while exporters weigh the potential impact on competitiveness. In Hanoi, manufacturing hubs are buzzing with activity as orders from abroad continue to flow, and local businesses see renewed confidence in the dong's value. Yet in both countries, there is an acute awareness that maintaining this momentum will require not just favorable market conditions, but disciplined governance and strategic foresight. Internationally, the rise of the dinar and dong is being interpreted as part of a broader shift toward a more multipolar financial world. Investors are increasingly looking beyond the traditional strongholds of the dollar, euro, and yen, seeking opportunities in markets that were once considered too volatile for serious capital flows. This diversification of focus reflects a recognition that global economic power is becoming more evenly distributed and that emerging markets are playing a more prominent role in shaping financial trends. Some market veterans are even calling this moment a potential currency reawakening for Iraq and Vietnam, suggesting that we may be witnessing the early stages of a historic revaluation in global currency hierarchies. Whether or not this proves to be the case will depend on what happens next, on the ability of policymakers in both countries to capitalize on this momentum, and on the willingness of global markets to embrace these currencies as credible, stable assets in the long term. The psychological impact of these all-time highs should not be underestimated. Currency markets are as much about perception as they are about fundamentals, and the sight of the dinar and dong breaking through long-standing resistance levels sends a powerful signal to investors who have been sitting on the sidelines. The narrative has shifted from skepticism to curiosity, and from curiosity to genuine interest. This change in sentiment could, in itself, attract further capital inflows, creating a feedback loop that sustains upward pressure on both currencies. Still, amid the excitement, seasoned economists caution that rapid currency appreciation can have unintended consequences. For export-driven economies like Vietnam, a stronger currency could make goods more expensive on the global market, potentially slowing growth in key sectors. In Iraq, an overly rapid rise in the dinar could strain government budgets if oil revenues, converted into local currency, become less valuable in real terms. Balancing the benefits of a strong currency with the potential drawbacks will be a delicate task for both nations. Looking ahead, all eyes will be on the next set of economic indicators from Iraq and Vietnam. Inflation rates, trade balances, and foreign reserve data will provide critical clues as to whether today's rally is built on a solid foundation or is merely a temporary spike. For now, the markets are responding with a mix of enthusiasm and caution, with traders watching every development for signs of confirmation or contradiction of this bullish trend. What makes today's events so captivating is the sheer rarity of such simultaneous breakthroughs in two currencies from vastly different regions, yet with surprisingly parallel economic trajectories. Both Iraq and Vietnam have endured years of economic hardship, political uncertainty, and external skepticism. Both have embarked on reform programs aimed at strengthening fiscal discipline, attracting foreign investment, and integrating more deeply into the global economy. And now, both are reaping